Good morning, traders, and welcome to the Bookmap YouTube channel. My name is Charles, and I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. So if you are just joining us for the first time and you have any questions and you don't understand what I'm talking about, please jump in the chat and let me know. And if you watch this video later on YouTube, feel free to leave comments in the chat and I will do my best to respond to those. If you are watching this from the Discord, from Bookmap's Discord, welcome to you. You can leave comments in the tab that says Futures Charles, and I will do my best to answer those as well. Okay. Wow. So the markets got interesting last week, didn't they? We were kind of experiencing this, slow melt to the upside. Wasn't super exciting. And then out of nowhere, the volatility stepped in and we got some crazy moves. So that makes trading as an intraday trader pretty exciting. Days like these are great days to be alive and to be trading. So don't be stressed. If you feel like how quickly the market is moving and the size of the ranges is too much for you to handle emotionally, psychologically, it's too much, then just size down. Just relax. Trade with smaller size, take fewer trades, take profits quickly, and re-enter. Okay? But, days with these kind of volatility that we've had, last week, they offer a lot of opportunities for day traders if you can be patient with your entries. Okay. So let me clear away some of this gobbledygook that we got here so we can get a little clearer idea. So first and foremost, for the market profile nerds in the room, I am in 4 tick increments. So that basically means that each letter, each TPO is representing 1 point in price. And that just kind of compresses the size of the range and makes it a little bit easier to visualize. So when you're looking at this gap down that we have this morning, it may not look like it's that big of a gap, but it is. This is a very, very large gap to the downside. We're talking roughly 30 points. So that's a big gap. Obviously, we have 25 minutes until the market opens. We may open much closer to yesterday's range, but as far as my analysis is concerned, I'm going to take it from right now as if the market were to open at this very moment. Okay. So there's 2 pieces of information that we want to keep in mind when we have a gap down like this. Okay. First off, the overnight inventory is net short, and most of that movement has been in the last few minutes, right? It's basically been since, after 7 a.m. this morning, most of this moved to the downside. So if the opening bell were to ring right now, the overnight inventory would be significantly net short. What does that mean? It means most of the participants are short, right? More of them are holding shorts than are holding longs in the market. What does that mean? What does that tell us? Well, it tells us that one of 2 things will likely happen purely as a result of the overnight inventory being net short. Either the momentum down continues, in which case we can get a lot more momentum to the downside because there's no reason for any of these overnight shorts to take profits, or we flip and turn around and start coming back up to fill the gap, in which case we start to squeeze a lot of these sellers. Because remember, it doesn't matter where they got short. Maybe they sold up here. Maybe they're a genius and they sold the overnight high. Maybe they sold in here when the market was going sideways for hours and hours and hours. Maybe they sold somewhere on the way down, but it doesn't matter. When the opening bell rings and the price starts to go up, every single one of these shorts is watching their P&L go down. Each tick the market goes up, their P&L goes down. Okay. So if the market opens and it starts to fill the gap, you are likely to have a lot of traders that you can squeeze. That increases the odds that we will fill the gap, that we will get back down to Friday's low at 59.83. Okay. However, as a general rule of trading the ES, when you have gaps that are this large, they often do not fill on that first day. So what does that tell us right when the opening bell rings? Well, first off, we should be looking for the market to try to fill the gap. We should be looking for the market to try to get back into Friday's range, to get above 59.83. But it probably won't be able to. We don't know exactly where it's going to flip in reverse. Maybe it'll immediately flip in reverse. Maybe it'll come back up and spend some time getting really close and then reverse, right? We don't know exactly where it reverse, but the higher probability is that it will, is that they will try to fill the gap and not be able to, and the market will keep going lower. So that is what we call a gap and go scenario, where the market tries to fill the gap and can't, and it turns around and starts going in the direction of the gap. Getting a gap and go would be very bearish, okay? Because we had a gap down on Friday, right? That was a gap that we never filled, that created momentum to the downside. We left behind a set of single prints that never got backfilled. So on Friday, at the end of the day, the market was telling us that we potentially could have more momentum, maybe even multiple days of continuing lower. And the opening with the gap down today confirms that we have that momentum down. Okay. So we have momentum. The daily time frame has already told us we're not going sideways here. We're going down. And so the assumption is if the intraday move today continues to go down, that's very bearish to see. And it means the market needs a larger pullback. So let's just take a second for context. Let's zoom out. We're going to start with the monthly chart. This is what Jim Dalton calls the top-down approach. By being able to look at the market on a longer time frame, it can sometimes give us more clarity about what's happening on a shorter time frame. So when we're looking at the monthly, what are we seeing? Just clear momentum to the upside, right? And it could go either way. We could turn around right here and head back up to make new all-time highs. We could continue lower to head down and test the lower end of this channel I have drawn here, somewhere around 5,700. It's sort of unknown when we look at the monthly. No problem. Let's see if we can get some more detail from the weekly. Okay. So on the weekly time frame, we're balancing, right? We're going sideways on a weekly time frame. And there's two different ways you could choose to draw that. You could choose to draw it as horizontal balance like this, where you could just say we're kind of bouncing in a range, and we'll see what happens when we get to one end of the range or the other. You could also look at it as a channel. You could say, this is your, whoops, that is a terrible drawing. Let me use TradingView for this. Yeah, you could look at it as a channel. Something like this. If that is the case, we have potential to break out of that channel to the downside today. Okay. So on a monthly time frame, it's uncertain. On a weekly time frame, it's in balance, but it could go up or down as well. So we are going to have to get even smaller. We're going to have to look at the daily time frame. Let me just delete this to give us some context. And as I said, on that daily time frame, we have momentum down. Okay. So pretty much there's one of two things in my mind that happens today. Either the market fills the gap, gets back into yesterday's range, and then we spend the rest of the day going sideways inside yesterday's range. Okay. How would that look? The market would fill the gap. It would get to 59.83. It would push up into yesterday's range, and then it would spend time and bring in volume. If we get that, I don't think we're going to make new highs, right? I don't think we're going to have some crazy move to the upside. I think we're just going to chop and grind all day inside of Friday's range. That to me is the least likely scenario. What is more likely to me is that either we chop and grind down here in the lower end of the overnight range, or we straight up continue the momentum lower. Okay. And as far as which of those two will happen, will we chop sideways below yesterday's range, or will we continue to move lower today? We will just have to wait and see how the market handles the gap. If they fill the gap, if they get all the way to yesterday's high, it'll probably be the choppy sideways, just bounce around in the lower end of the overnight range. But if we can't fill the gap, if we try to fill the gap and we get a sell-off, getting back below that overnight low tells us we are heading lower. Okay, we're taking the market to the downside. So then you say to me, Charles, okay, we hear you. You're more bearish. You think the probability is higher that the market is going to continue lower, but you're going to wait for the market to handle the gap, first, before you enter any trades, before you do any gambling, you're going to wait until you have information that confirms your thesis that the market is bearish. Great. What are the targets to the downside? If it does start to sell off, where is it likely to go? Okay, the first target in my mind, as I said, is a test of the overnight low. So getting down to 59.45, that's the first place the market should go if I'm right, and I should be bearish today. The second is the base of the single prints up from 1220 at 59.33. Base of single prints is often an area where the market will find support when it comes back to retest them. So if the market gets down there, that is a place where it could find support and turn around and start heading back up. But if that is not enough, if the market gets down to 59.33 and it does not flip in reverse and it keeps going, the next targets are down here around 5,900. And you can see there's multiple week references stacked on top of each other, basically from 5,900 to 5,890. Okay. And that to me is where the market would go if it doesn't reverse around 33. Okay. So I am bearish. I am assuming the market is going to head down to at least the overnight low 45, probably the base of the single prints at 33, but I would need to see new selling there to expect it to go further. However, if I do see new selling, I ought be bearish, because the way we think about the market is it pulls back as far as it has to bring in discount shoppers, right? We already pulled down to 5,900. We did it last week. We came down there. We had the FOMC, and then we had a sort of balancing day. Then we had a day that looked like it was going to continue lower that ended up completely reversing up and out of there. So we gave those buyers a chance to step in at 5,900. And what did they get for it? Couldn't even get a new all-time high. And now the market's coming back down again. So my guess is they're going to need to take the market lower to bring in more shoppers, right? They're going to need to get all the way down through those weak references to be able to get another flip in reverse like this one. Okay. So I'm very bearish today, but as always, anything can happen when that opening bell rings. If that opening bell rings and the market fills this gap and we don't get rejected, then I'm wrong. And we're spending the day inside of Friday's range. But anything other than that, I think we're exploring lower prices. Any questions on any of that from the chat? I assume one of the questions will be, can we take a look at the NQ? So we'll do just that. We'll take a look at the NASDAQ. Yeah. The NASDAQ futures. Okay, so the NASDAQ is in exactly the same scenario as the ES. It was a gap down. They almost filled the gap. They missed it by like a point, filling the gap on Friday. And then the momentum continued to the downside. We've got more momentum in the overnight. So we are opening with a gap down. Okay, so I'm going to describe it exactly the same way as the ES. The first highest probability when that opening bell rings is that the market will try to fill the gap. It'll try to get back to Friday's low around 21,500. Okay. If it cannot get to there, if it gets smacked down, that is bearish. That is a gap and go, and we are looking for continuation lower. If it gets to Friday's low, we're looking for that to become resistance and continuation lower. If neither of those things happens, I'd be saying, let's look for some sideways inside Friday's range. Okay, let's look to chop around in here for a while, but there's really nothing that's going to get me bullish unless we get above the overnight high and get new buying up there. But plenty of time between here and there to change my tune. As of now, I am bearish on the Q as well. Okay. As far as downside targets are concerned, the easiest way for me to trade the Q is to look at where the large cumulative volume nodes are. What do I mean by cumulative volume? I just mean if you take all the volume that has traded, all the contracts that have traded hands, and you smush them all together, which you can see with these large orange nodes on the left side of the screen here. Those large nodes tend to be where the market will go. It'll go from one to the next, to the next, to the next. Not necessarily like on the same day, but that's the target. If you want a clear, understandable target, the market always moves from one node to the next. Okay. So just very simply put, we got a node here. We got a node here, right? The market does not go through lower here. It finds support. So what does it do? Turns around and goes back up to that previous node. Spends, the better part of 2 days grinding around there, breaks away. Where does it go? Next large node, right? Boop, boop, heads up to that next large node. Spends a couple days grinding around there. When it breaks away, where does it go? Next large node. Boop, boop. Do you see what I'm saying? So this is just how it moves. Watch when it comes back down. We have a large node up here and a large node down here. Right? We spend a few days grinding around this large node, and then what happens? We fail. Where do we pull right back down to? Right back down to this large node. When that's not enough to reverse market, where do we go? The next large node. That is enough to flip the market. So what does it do? It turns around, back up to that large node. Spends a few days going sideways there, and then what? Tries to make new all-time highs, can't do it. What does it do? Right back down to this large node. Okay, so that is how I look at targets on the NQ. Is I say, where is the momentum? We are always going from one large node to another. Which one are we leaving? Where's the next one? Well, right now with this gap down, we are leaving the large node that's at 21,500, and we are targeting the move to the large node around 21,100. Okay, or 21,180. That large node down there. So that is my first target to the downside on the NQ. So first, the test of the overnight low, always, right? Which is at 21,363. But if we get new selling there, I would look for a move all the way down to 21,180. Okay. You heard me right. That is a 200-point move to the downside, which there is high potential for today. If we get a gap and go, if they cannot fill the gap and we get more momentum to the downside at the opening bell, we could make a massive move in the NQ. Okay. So buckle up, kids. It could be a fun one. There is potential for this to be a gnarly, gnarly day. And then last but not least, the final thing I want to talk about is something happened last week, which is extremely rare to see. It is just not common, which is the market left behind multiple low volume nodes. And on that day, it was right here on the 20th, I was talking about how bizarre it was to see that we continued to have momentum to the upside, despite the fact that we left those low volume nodes. I commented that I've seen maybe 2 or 3 times ever the market do that, leave behind those nodes. Well, look at where we are today. We're back below them. The market found a way to come back down and backfill those low volume nodes. So that's just in response to what I was talking about last week. When you see those super low volume nodes, they are powerful, potent information. Now, I would not have predicted that it was going to take 5 days for us to come back, but they always come back for those low volume nodes. So I thought I'd mention that as well. Any questions from the chat? And of course, I have a question for the chat, which is, did you smash the like button? Did you push the thumbs up? And if not, what is it going to take? What do I got to do to earn your like? Also, Bookmap wanted me to mention, they've had these deals going on for the Christmas holiday. Those are coming to an end. So if you've been flirting with the idea of signing up for Bookmap, now is the time. Literally today or tomorrow is the time to sign up for Bookmap because their deals end at the end of the year. Okay. So if you want to save 30% upgrading to Global Plus, today's the last day you can do that. And for the next 2 days, you can save 50% on the MBO bundle, which gives you all the fun toys to play with. Okay. So if you are thinking about signing up for Bookmap, do not hesitate. It's now or never, my friends. Well, not never, but you know what I mean. If you want to get a great deal, you might as well get the great deal and try it out. The same thing is true for the Brigade membership. Okay. You'll see at the top of the screen, I talk about the fact that I live stream like this every single day from 9:30 to 10:30. If you want to be there to watch those streams to get my insights, I have been for the last 3 years charging $10 a month for this membership. Starting in January, it's going up to $20 a month. But here's the fun part. Anyone who is signed up prior to January 1st gets 6 more months of $10 a month. So if you've been thinking about signing up for Bookmap, now is the time because they got their discounts going. If you've been thinking about joining the Brigade, now is the time because you can lock in that $10 a month fee for the next 6 months. Okay. Food for thought. I'm just throwing it out there. Otherwise, if you wait, if you're like, I'm not sure if I should join. And then a month from now, you're like, man, this guy is right all the time. I've got a lot to learn from him. I want to sign up. You're going to be paying double. So you might as well sign up now. Okay. Good morning to Jay. He says, traders, let the good times roll at the big casino. Do, 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 do. DNK in the house. Good morning to you. He says, it looks like we will open with a gap down today. That is correct. A big gap down for the ES. Nap, good morning to you. Will is here. Danny G in the house. Trevor C, good morning to you. Jason is here. Welcome, welcome. Demo Trader says, just hit the like. So does Top Gun. Just hit it. Just push it. You don't even have to hit it. You could just gently nudge the button. Push the button. Anthony says you may want to change your banner. Yeah, well, they got 2 more days. It'll be changed for the next Bookmap stream. You can count on that. The Demo Trader posted the link here to those deals on Bookmap if you want to sign up for that. Michael says, I like your approach. Could you talk a little more about your TPO platform? So Market Profile, there's not anything in particular about this company that I use, Window Trader, that there's anything special about it. I think any TPO chart is fine. But if you're asking about using TPO charts, using Market Profile, it's a very simple concept, okay? The information, the purest information that there is, the most reliable, it is never wrong, literally, never ever wrong. Information you can have is price action. What does that mean? It means where does the market go in terms of a price? How much time does it spend there? And how much volume does it bring in there? Everything else is a derivative, right? If you're looking at moving averages or Bollinger Bands or VWAP or anything else, what you're looking at is a derivative. You're looking at a mathematical understanding of price action. But the purest way to understand price is to think about it like an auction, like an art auction. How does an auction work, right? The auctioneer brings out the painting. He starts talking about the, $1,000, $1,000, and a bunch of hands go up in the air. Volume, right? Lots of people want to buy that painting at $1,000. So he lifts the bid, right? He lifts the price. He makes it $1,100. I have $1,100. Do I have 12? 12. I have 13. 13. And as he takes the price higher and higher and higher, fewer and fewer hands will be willing to do business, right? Then you will get to a point where it'll be down to just 2 people. I have 1,900. Do I hear 2,000? 2,000. 2,000. 21. 21, ma'am, 21. Going once. Going twice. Sold to the gentleman for 2,000, right? That's time. That's tempo. At the beginning of the auction, when there were tons of hands going up in the air, that auctioneer was moving fast. He was like, give me that, give it up. But then when he started running out of people willing to pay this higher price for this painting, he starts to slow things down, really give them some time to think about this. Are you sure you don't want to buy this painting? Are you sure you want to let somebody else get it? Right? So those two things, the tempo, the speed in which price is changing, and the amount of volume, the amount of hands that go up in the air, tell us when the market is getting overbought, when it's too expensive and people aren't willing to pay this anymore. There's only one guy left willing to pay this price. But the difference between the stock market and an art auction is there's only one piece of art. In an art auction, there's an unlimited number of shares of a stock or futures or whatever. So the auction goes two ways. It goes up as high as the buyers can push it, and then it turns around and it goes down as low as the sellers can push it, right? So what Bookmap lets you do, what Orderflow software like Bookmap lets you do, is it lets you see where people want to bid, right? Where do they want to do business? For example, right now, there's a lot of people that want to go short at 59.65. Now, maybe they're already long and that's where they plan to take profits, or maybe they see that as a resistance and that's where they're going to sell. All right, real quick, the market is open and we have that gap down. So the first question we're asking ourselves is, can they fill the gap? Can they get back to 59.83? If they cannot, it is very bearish. And the first target is a move down to 59.45. Let's see what happens. But going back to the auction process, so what Bookmap lets you see is, where do people want to do business? Where are they willing to go long or short? What Market Profile lets you see is how many people actually do it when the price gets there, right? So by being able to understand where the market spends the most time and where it brings in the most volume, you can understand what's happening in that auction process. Is it going to keep going up, or is it going to go down? Is it going to keep going down or turn around and start going up, right? By understanding that auction process, you can have insights as to what to expect to happen next. Well, the purest way to look at that, in my opinion, is a TPO chart mixed with a volume profile chart, which is what we call market profile. Okay. So I'm using Bookmap for two purposes. First off, I'm using it to see the order flow. I'm using it to see where are those large nodes where people want to do business, because the market wants to go there. It wants to go where people want to do business, because all the market cares about is, contracts changing hands. It doesn't care where they change hands. It doesn't care if they go long or short. It just wants lots of contracts to change hands. And so it will go to wherever there is business to be done. And so that's the first thing I'm looking at Bookmap for. The second thing, which is unique to Bookmap, is this stops and icebergs programming. This is basically an algorithm that keeps track of individual accounts within the data. Is one individual account trading large size? Is it doing something where it hides the size, which is what we call an iceberg? When you start to see what the larger accounts are doing, then you can kind of get an idea of when they're playing games with you. Should I really be trusting this momentum down, or is it a fake out? I'll give you an example right now. Right now, we're heading for that overnight low that we talked about, 59.45. And anytime I see us get to that overnight low, what am I asking myself? Are we going to keep going? Are we going to get new sellers? Well, Bookmap is telling me probably not, because we've just taken out some large stops down here at the lows, and we've got icebergs up above price. So we've done a lot of business down here, okay? Taken out a lot of stops, and stops, by the way, are the last people to do business, right? The ones that get squeezed. So we've taken out a lot of stops, and we have a reason for the market to come back up and do business at a higher price. So do I think right now at this moment the market's going to liquidate much lower? No, I do not. I think we're going to get a look below and fail. I think it's going to poke below that overnight low and then try to come back up through the opening price. Now, I don't know whether it will or not. And by the way, neither do these computers that entered these orders. They don't know for sure the market's going to come back up to them, and they may move them if it doesn't. But it's just that the higher probability is that the market will try, that it will poke below this overnight low and then come back up and try to pass through the opening price. Let's see what happens. Okay, there's the poke below the overnight low. This is where we start looking for new selling down here. So our question is, can they turn this area between 59.45 and 59.48 into resistance? If they can, that is the gap and go. That is the bearish signal. If not, we're looking for them to try to fill the gap. What's it going to be? What's it going to be? Or another way to put it, now that the market got down to this price level, are there new hands that go up that are willing to go short down here or not? Do we run out of sellers? In which case, the buyers get their turn. I'm teaching all of this in depth, like as in depth as you're going to find a trading course anywhere. Starting next week, it is the Mastery of Markets and Minds workshop. If you are interested in checking that out, head to marketsandmind.com. It starts next Monday. So if you want to sign up, now is the time. You just scroll on down, clickety-click on here, and you can add that to your cart and sign up. And I teach everything there is to know about trading. I teach understanding the auction process. I teach learning how to develop your skills individually as a trader over time, how to recognize changes in the market, risk management, trade entries. I teach my trade setups, everything. It is an all-encompassing course, and it starts next Monday. Food for thought. Okay, so once again, we're thinking the higher probability is a look below and fail that comes back through the opening price, but we're watching for resistance right now at 48. Do the sellers smack it down or not? All right, we are getting more new selling. That increases the odds that we are heading down to 59.33. The base of those single prints up I talked about in the first 5 minutes. However, this market is getting itself overly short, overly fast. So I do suspect we will get a bounce at 33 and then come for the gap fill rather than getting that further downside continuation. If the market goes too far too fast, it needs to cool off. And if it can't cool off right now with a look below and fail of the overnight low, it'll be a bounce at the next potential support. This is what we talked about at the opening. Remember, we talked about the overnight inventory, right? That for the market to have moved this far down this quickly in just the last few hours, a majority of those traders had to be short. Once our opening bell rings, if the market starts to fill that gap, they're all panicking because their P&L is going down. But if that doesn't happen, if the market is able to push down below where the lowest seller was in the overnight and we get new selling, well, they've got no reason to exit. And that's why you get the continuation of the momentum to the next support, which is a place that they will consider taking profits. I'm telling you guys, it's all an auction process. Even if you're trading against computers, even if 90% of this is computers, those computers are programmed based on historical data, and historical data is all based on auction processes. Steven says hello in the Bookmap Discord. Good to see you. DNK says the ticks are still very far from zero. That is why I think we'll get the bounce, right? So if the ticks were closer to the zero line, I would be very bearish that we're going to make a move all the way down to the weak references, right? But because of those ticks being so oversold, I think it won't take long and some of these sellers will take profits and will come back through the open. So let's see what happens, one step at a time. Bookmap going dark here. Losing some liquidity. Okay, so if we remember that node, 59.48, which was holding the market down just now, right? At this point, we can pretty much just remain bearish the rest of the day as long as we're below there. Because as long as price remains below 59.48, there has to be new sellers joining the market. Because if any buyers join, we're passing back up through it. So as long as we keep getting more sellers, we should assume the momentum can continue to the downside. So I am looking for a bounce here around 59.33. I'm looking for that to come back up into this overnight low and test it. But I am bearish as long as it holds as resistance. If not, if it passes back through, then that may be the low and we're looking to try to fill the gap. Okay. So right now I am bearish, but looking for a quick little bounce. Right now. Looking for a bounce here at the single prints. A bounce here for the sellers to take profits. Good morning to Debbie B. Welcome, welcome. Oh boy, in the house. R. Thank you, Demo Trader. Billy K is here. Kevin is with us. Welcome, welcome. Sook is here. Good morning to you. Daniel says, how is your Bookmap heat map so clean? It just zoomed out to certain settings. Yeah, so I have, if you're talking about the sort of market maker, bracketing bots that always make the Bookmap look disgusting, you can use TraderMap Lite, which is a free add-on that everyone gets, or TraderMap Pro. I'm using TraderMap Pro right now. And what it does is it just filters out those market maker bots, those bracketing bots. So, it's just an algorithm that cleans out that extra data. It just makes it a little bit easier. TraderMap Lite or TraderMap Pro. Oh boy says waiting for a bounce to get into a short. He wrote that a while ago. Yeah, I will just tell people that when a market has momentum, which is what a gap down is, if you're taking trades in the direction of the momentum, you can't wait around. So waiting for a bounce is always smart. Selling resistance rather than selling the low, but just don't wait too long, because if this thing keeps the momentum going, it could go, like we talked, it could go a massive move to the downside today, and you don't want to miss it, because you're waiting for that beautiful bounce. That is the difference between trading excess, trading momentum, trading a trend, and trading balance, trading a range. Is that with momentum, you get in the trade as quickly as you can, and then you stay in as long as you can. And momentum, you wait until you're absolutely sure this is the best entry you can get before you get in, but then you take profits very quickly. So those are sort of the different approaches depending on what the market is giving you that day. And I used to think, maybe some people should just either be trend traders or balance traders. You should either trade momentum or balance. But I've now come to understand, as long as you can recognize which is happening and you can have the tools in your arsenal to trade them both depending on which is taking place, you can trade every market. That's, of course, what I teach in my Mastery of Markets and Minds workshop. marketsandmind.com. Okay, so we're not really getting much of a bounce here, a little bit, but I would suspect we should be able to head back up to the overnight low around 59.45. So if we can't, that is very bearish to see, because that is more new selling at the lows. More hands going up in that auction. And those hands are sellers. Alex says, first time I've tuned into Charles, really enjoying it. I will join the Piratetraders Brigade. Thank you, Alex. I'm telling you, today or tomorrow is the time to do it, because then you only have to pay $10 a month for the next 6 months. Link at the top of the page. I'll stop. I swear to God, I'm going to stop you guys. Nap says we have PMI at 9:45. That's why Bookmap went dark. The hemp chat says, where did you get your footprint chart that you were using? So Bookmap has footprint. If you have Bookmap, you can just add footprint right on top of it. This chart over here is called a market profile chart. It's a little bit different. It's very similar to footprint, but it's just slightly different. So these are volume, just simply volume profiles that are showing us how much volume traded at each particular level. Man, I got chickens in my backyard. They've become my new pets. I'm seeing them out the window right now. So I think somebody in my neighborhood had a chicken coop that must have got destroyed in a storm. Because I got chickens now. And a few days ago, I started giving them corn. I just had like a bunch of cans of corn. So I started giving them corn. And they're my pets now. They're here every day. So I'm officially a chicken feeder. All right. So we are getting that bounce. Right? The buyers are starting to try to defend, and some of the sellers are starting to take profits. So what happens next will give us a great indication of what to expect for the rest of the day. If we now turn the overnight low at, again, you can't have exact numbers, but around 45, if we turn that into resistance, this thing's going much lower today. Right? Like this thing is just going to continue to sell off because that is a sign of more new sellers at the low. If it cannot hold as resistance and we come back up through the opening price, then the selling, at least for now, is over and the market will try to fill the gap. So moment of truth. Can the sellers hold the overnight low? Good morning to Queet Trading. Cute Trading. Good morning and welcome. Tom Gunn says 80s pop. I'm not sure what that means. I must have sang a song. Casey, welcome. Arjit is here. He says, what market profile chart is it? The company is called Window Trader. Window spelled without a W on the end. But there's lots of different places that have market profile software. I would say you should just look up your broker or, whatever software you use to trade and see if they have it. So if you use, Ninja Trader, they have a version of it. TradingView has a version of it. Sierra Charts, Quant Tower, Motive Wave. On and on the list goes. So just figure out who you've got access to and you can get market profile software. Jason says free eggs. Yeah, but where are the eggs? They're wild chickens. They roam free. I don't know where they're laying their eggs. But that would be dope. Okay, so if we're looking at nodes of liquidity in Bookmap, let's just kind of take a second to figure out what's been happening with these nodes of liquidity. These are how market makers, or not market maker, but you know what I mean, bigger traders kind of influence algorithms, because algorithms use liquidity in the order book to, you know, decide what they do where. So for example, the market made a new low, and then they started to add liquidity below and add liquidity above, right? That put the market in sort of a tense two-sided trade where it was like, do I go up? Do I go down? Oh, what do I do? What do I do? What do I do? And finally, the market chose to head up for that liquidity. Again, they added more, and that's what finally gave it that move up. Well, once it got up in there, they disappeared that liquidity. They completely disappeared it. So it started to drift back down. Price started to drift back down. Well, what did they start to do? Add liquidity at the low. So what they're doing right now is they're trying to use this liquidity at 59.25 to push the market away, right? To get anyone who's selling to be thinking, well, and again, we're talking about computers, to be thinking, oh, well, there's liquidity right below, so I'm not going to short for this move. So they're trying to scare price away. Now, if the price doesn't bounce up into that overnight low and this liquidity suddenly disappears, guess what the market's going to do? Whoosh, come right back down. But for now, they're trying to push the market back up into that overnight low. And they're adding more and more liquidity to try to scare price away. Let's see what happens. Knapp says, we got pending home sales in 5 minutes. Well, listen, if Bookmap's going to go dark at 10 a.m., right? All those day trading bots are going to turn off for a second because of a news dump and the unknown nature of that. An excellent place to be for the market would be right at the overnight low, because if they get that news and boop, 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 they start to come up, they can squeeze every seller all at once. Or if they get that news and they get a sell-off, boop, 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 they'll get traders chasing to the downside. So if I was the market, I would want to be right at that overnight low as the clock strikes 10, as that will present the market with maximum pain for day traders. Dun, dun, dun. Oh, yeah. Dun, 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 dun. Oh, yeah. So you see how price goes down? They add more liquidity and more. They are trying to scare that price away. But it ain't working. All right, this is bearish to see. New selling at the lows means the market is not done with its downside momentum. Now, everyone take a deep breath, because in 1 minute is going to be that news dump and we're going to get some violent moves. But in general, the fact that we have now pushed below the overnight low, turned it into resistance, pushed down to where the base of those single prints were, and we got new selling there, that increases the odds we need this larger pullback that I talked about down towards 5,900. It's very bearish to see. Like I said, don't short the low just because I said that right now, because when the news dumps right at this moment, anything can happen. But the higher probability at this point is that the market is going lower. The sellers are in control. They've had the momentum since about 6 a.m. this morning. Okay, so we've got, in terms of, smaller levels for support, we got one right now at 59.20. We could expect a small bounce there. We got support again at 59.10. We could expect a bounce there. We have a large node right here between 59.10 and 5,900. So we don't expect it to liquidate through there, but to have to kind of poke and grind and poke and grind. But at this point, in my mind, the highest probability for the day is that we are heading down at the very least to 58.98, potentially even 58.90 if the selling continues down at the lows. This is bearish to see, y'all. The sellers are in charge, and they keep bringing in more sellers. So monitor for continuation to the downside. Whenever you get to a support level, look to see if it bounces. And what kind of bounce does it get? When it gets back to a resistance level, where does it get resistance? Can it hold that resistance? As long as the sellers remain in control, assume this market is going to continue to the downside. Okay? Thank you all so very much for watching. I appreciate you. I love you to death. And I look forward to seeing you next Monday morning in the Bookmap Discord. If you are a member of the brigade, boy, that was a quick bounce. If you are a member of the brigade, head on over to the private stream and we will monitor for continuation lower together there. Thank you guys very much. Have a great rest of your day, and we will see you next week. Bye. So long, farewell to you.